You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Friday, 9th day of May, 2025. And Sunday is Mother's Day. So, remember your mother, remember your grandmother, remember your wife, and anyone who was sort of like a mother figure to you as you were growing up or after you became an adult. Be sure and remember them too. It's a special day. Okay. Well, thanks for joining us on this fine Friday. We do 2 live broadcasts every trading day. The first one is our live training room. So to get in there, you got to be a member or you have to be on the 1-week free trial. If you have not yet taken the 1-week free trial, go to mytradingiq.com. At the top of the page, there's a purple button. You can't miss it. Click it, fill out the form. We'll get your indicators up and indicating today. We'll send you a bunch of information that you can study over the weekend. And then your trial will officially begin Monday morning and run all through next week. Now, when you take the free trial, you're not just gaining access to the live training room, but we treat you just like you were a passport holder for the entire 5 days, and there's no credit card required. We want you to be able to focus on what's being taught, not worrying about the whatever it is you spend for this trial. No, focus on what's being taught so that at the end of the trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, but this time, scroll down the page to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but maybe you just still want to join live. Some days you'll be busy and you can't join live, but you want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN, the Christian Financial Radio Network. But you don't have to remember all that. Just youtube.com/CFRN. CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to watch them all. But it's a great resource to have at your fingertips, and it kind of lets you know we've been around a minute. youtube.com/CFRN. This is our schedule for the afternoon broadcast. Michael will join us pretty close to the top of the hour and give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for 30 minutes. And then I'll wrap it all up with a good word for the day. So let's get into the devotional. The topic we're on is after the cross. Today's scripture, John 14, verses 11 through 14. And I'm going to share it with you from the Message translation. Now, if you have a red letter edition of any translation, these are words that were spoken by Jesus. Believe me, I am in my Father, and my Father is in me. If you can't believe that, believe what you see, these works. The person who trusts me will not only do what I'm doing, but even greater things, because I, on my way to the Father, am giving you the same work to do that I've been doing. You can count on it. From now on, whatever you request along the lines of who I am and what I'm doing, I'll do it. That's how the Father will be seen for who He is in the Son. I mean it. Whatever you request in this way, I'll do. Again, that's John 14, verses 11 through 14. They will do even greater things than these. Greater things than Jesus? Think of all the things He did. In Mark 1:21, He cast out demons. In John 9:1, He healed blind eyes. In Matthew 9:1, He healed legs that weren't working. In John 11, raised people from the dead. And He said we'll do greater things than Him, because He was going to the Father, because He was sending His Spirit to live in us. So what can it look like to live in the Spirit? Peter and John raised someone from the dead. A man was healed through Peter's shadow. An earthquake on the wings of praise broke off chains and opened prison doors in Paul and Silas's experience. Paul cast a demon out of a girl in Jesus' name. He got in trouble for that too. She was their moneymaker. Paul raised Dorcas from the dead. They are not the exception, they are the examples. And what's the common denominator? They were living by the power of the Spirit, the Holy Spirit. Jesus said, we will do greater things than He did. Wow. What if Paul and Silas and Peter are examples of what it looks like for a God follower to submit to the power of the Holy Spirit? what would that mean for you? Let's pray. Heavenly Father, we believe in you. We believe in Jesus and the works he has done. Strengthen our faith to ask boldly in your name, trusting that you hear us and will act for the Father's glory. Help us to walk in your power and love, doing greater things as your Spirit leads. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Friday. Everybody's been working for the weekend, and here it is. Let me give you the numbers from around the world. Starting here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 82 points. The Nasdaq is down 42. S&P 500 is down 8. And the Russell 2000, our man in the street, down 3.5 points. If you were following along in the discussion group this morning, I suggested that, and this was prior to the open, to the Wall Street Open, I said I think we might see a little pop at the open, and then I went on to explain my reasoning. I said, but I believe it in the second hour we'll see the markets turn down. So, what can I say? Sometimes a blind squirrel finds an acorn. So, that's the story on the U.S. markets. In the commodity basket, crude oil's up 77 cents, trading 60.69 last. That's a gain of over 1.25%, or $780 per contract traded. Gold up $44.50, trading 33.50.90 last. That's a gain of well over 1.25%. Silver up 39 cents, trading $33 last. That's a gain of almost 1.25%. Now, in the Asian markets at the close, the Nikkei posted a gain of 574 points, 1.5%. Shanghai dropped 10, but the Hang Seng gained 91. And in the European markets at the close, FTSE up 23, the DAX up 136, the CAC up 49. So we had a mixed day in Asia. It was a green day for the UK, but at the moment it is a red Radio Friday here in the US of A. Now we're not deeply in the red, but when we get to the charts, I'll again go over my reasoning why I think we have slightly lower prices ahead before we began what I think could be the beginning of an uptrend. Now, well, maybe we'll talk about that later. Yeah, let's just look at the news. Habemus Papam. Chicago native Cardinal Robert Prevost was elected head of the Roman Catholic Church yesterday, becoming the first U.S. citizen to hold the office. The 69-year-old, who is also a citizen of Peru, selected Leo XIV as his papal name, a nod toward the late 19th century Pope, Leo XIII. Not so good with these Roman numerals, so I think I got it right. I don't know. Now, Pope Leo was known for opening the church to modernity, he wanted to make things modern. How about that? And emphasize workers' rights. So, do we have another liberal in the Vatican City? You better believe it. Born in Chicago in 1955, Prevost joined the Augustinians in 1977, a missionary order dedicated to unity, harmony, and service. The order stationed Prevost in Peru in 1985, where he served for over a decade, later becoming its leader. In 2015, Pope Francis made Prevost Bishop of the Diocese of Chiclayo, Peru, later naming him a cardinal and head of the Vatican's dicastery for bishops. Prevost is seen as a centrist in somebody's eyes, and we'll just see if he follows Pope Francis's lead, because some of the things Pope Francis did, and I have respect for the office of Pope, if you want to call it that, but a lot of the stuff he did made a lot of Catholics very unhappy. My wife was raised Catholic. The little town I grew up in Georgia, small town, small and shrinking, I think, still to this day. On the outskirts of town, there was this one little building, and that was the one Catholic church. And I remember driving past it many times with my grandmother or grandfather, and they would say stuff like, "I wonder what they do in there." Well, on Tuesdays, I went there for karate lessons, because on Tuesday night, the Catholic Church they didn't have pews, they used chairs. On Tuesday night, it became a dojo. True story. The U.S. and U.K. announced a framework for a trade deal yesterday, the largest step towards a potential trade agreement since Trump imposed sweeping tariffs on U.S. trading partners. The deal, pending finalization, focused on tariff relief for autos, steel, and select industrial goods. The U.S. is the U.K.'s largest trading partner, accounting for over 17% of annual UK trade, with total trade between the two nations at roughly $417 billion. A 10% base tariff on many UK imports will remain, but tariffs on UK car imports to the US will drop from 27.5% to 10% for up to 100,000 vehicles annually, and tariffs on UK steel and aluminum will be eliminated. In return, the UK will ease trade barriers on US beef and ethanol, while keeping its digital services tax on major tech giants. Talks with other major U.S. trading partners, including Japan, India, South Korea, and the European Union, are ongoing, with U.S.-China negotiations scheduled for sometime this weekend. And if you happen to live in the Phoenix area or anywhere in the great state of Arizona, look up in the sky late tonight. A Soviet-era rocket capsule, Cosmos 482, is due to hit Earth late tonight or early tomorrow morning. It is unclear where the 1,100-pound spacecraft will crash, with experts estimating a low 1 in 25,000 risk to humans. Cosmos 482 was launched in March of 1972. Man, that thing's been up there a while. And is slated to become the Soviet Union's 9th uncrewed mission to Venus as part of its Venera program, which ran from 61 to 83. While a similar mission launched days earlier made it to Venus, Cosmos 482 failed to escape low orbit, instead separating into 4 pieces. One piece burned up and 2 landed in New Zealand. Atmospheric drag has since pulled the landing capsule towards Earth. The titanium spacecraft is currently traveling at 17,000 miles per hour. It will hit Earth's surface at 150 miles per hour. And they think it's going to land in Arizona. The Venera program notched many successes, including humans' first probe to land on another planet and the first to return images and sounds from another planet's surface. So I guess if a tree falls on Venus and there's no one there to hear it, it still makes a sound. Oh, they don't have trees. Okay, my bad. Well, I've always thought that what we pay to get a piece of paper from the West Coast to the East Coast, and I think that price is currently around 50, 60 cents. I don't send a lot of letters. I always thought that was a pretty good deal. I would hand it to my mailman, and 3 days later, somebody on the East Coast receives it. I mean, that's a good deal, right? Unfortunately, the U.S. Postal Service reported today a net loss of $3.3 billion for the 3 months ending March 31st, as the money-losing agency continues to hike stamp prices and look at ways to cut costs. The Postal Service said its controllable loss was $848 million, up from $317 million in the same quarter last year, as mail volume continues to fall. Yeah, I mean, once email came along, you didn't need a whole lot of stamps. In late March, the postmaster resigned under pressure from the White House. President Trump said he is considering merging the Postal Service with the U.S. Commerce Department, a move Democrats say would violate federal law. They don't like any. It doesn't matter what he does or what he says. Oh, it's a beautiful day. No, it's not. Look way over on the horizon. That little white puffy cloud, that could become a tornado. We should all run, hide. Unbelievable. Now, in the UK, post offices there are not losing money, and they also serve as banks. If you've ever been there, you already know this, but to those who haven't, I found that a very interesting concept. And with what I just read, Trump considering merging the Postal Service with the U.S. Commerce Department, it's kind of a similar thing. Not exactly, but sort of. I remember when I was a kid, the mail used to run twice a day. Mailman would come by in the morning, and then he'd come again late in the afternoon. Google is reportedly losing ground in the search industry due to AI upstarts. But the company isn't taking the threat to its most important business lying down. During a hearing as part of Google's ongoing antitrust battle over its search dominance, Apple's Senior Vice President of Services, Eddie Q, testified that the iPhone maker saw a drop in web searches via Safari for the first time last month. I never did like Safari. My personal choice is Chrome. I know a lot of you guys, and I think Michael uses Brave sometimes. Microsoft Edge, I don't even open that thing. Google pays Apple roughly $20 billion a year to set Google Search as the default search engine in its Safari browser. So a drop in Safari searches could mean a drop in Google search traffic, though Google says its search traffic continues to grow even on Apple devices. You know, a lot of the stuff that if I have a question about something or I need to know something, I will ask ChatGPT in some cases before I ask Google. And because I used Google so much for so many years, it's a tough habit to break. But if you look in the TIQ videos channel on Telegram, we had a question last night in the workshop that no one knew the answer to. So I asked ChatGPT, and it gave me explicit instructions. 3 different ways to solve the problem that the individual was having. So it's posted in TIQ videos. So if you don't have ChatGPT, you should get it. And no, they're not a sponsor of the show. Q attributed the decline to more users opting for generative AI-based services like OpenAI's ChatGPT. I guess I should read these articles first. Search and Perplexity, adding that Apple will likely add the platforms to its search options in Safari in the future. So, honestly, I didn't know that you could use Safari, the front end of Safari, but actually the back end was Google. What I've always done on my iPhone is I just go in and make my default search engine Google. So anytime I click a link or something, boom, it's going to open in Google and not Safari. I'm sure you guys know how to do that. If not, ask ChatGPT. You'll get step-by-step instructions. All of this comes as Google continues to battle the Justice Department's efforts to convince a federal judge in its antitrust case to force the company to sell off its Chrome browser, among other elements of its search business. Also from Bloomberg, oil rose as algorithmic traders accelerated buying on renewed optimism about trade talks between the U.S. and China this weekend. West Texas Intermediate climbed atop $60 a barrel, but was well off its session highs after President Trump posted on social media that an 80% tariff on China just seems right. His administration is weighing reducing levies on China to de-escalate tensions and temper the economic pain both countries are starting to feel. Now, my bet's always going to be on America. I think China cries uncle first. So, and Trump, he knows a thing or two about the art of the deal. He actually wrote the book, right? Tesla shares jumped Friday, or today, extending yesterday's gains, fueled by trade deal optimism after President Trump announced a trade agreement with the UK and suggested that more deals are on the way. Stock was up nearly 7% at $303.75 in recent trading, its highest price since February, putting shares on track to post gains for the 3rd straight week. The surge came amid broader market gains as investors cheered the news of the UK trade deal. Now, Jerome said it best. Inflation is low, the economy is strong, the market is climbing, but I just don't want to cut rates right now. Now keep in mind, the evil oligarchs he works for, they don't want him to lower rates. See, when the Fed prints money, which Thomas Jefferson warned us about, but anyway, if you don't understand the Federal Reserve, just Google the creature from Jekyll Island. I said the creature from Jekyll Island. And you'll understand how the Fed came to be and how wrong it is and how right Thomas Jefferson was. when he said that some 250 years ago. Anyway, moving on. Cloudflare. Some of you probably aren't familiar with Cloudflare, but it's up over 7% today. Cloudflare shares took off today, a day after the big provider of cloud services beat revenue estimates as it signed a pair of big contracts. The company reported first quarter revenue jumped 27% year over year to $479.1 million, beating Visible Alpha estimates by about $10 million. However, adjusted earnings per share of 16 cents came in a penny below forecast. The CEO and co-founder, Matthew Prince, said Cloudflare scored the largest contract in its history, a more than $100 million deal driven by its Workers developer platform. It also signed its longest-term secure access service edge ever. Prince added that Cloudflare has the scale, the technology, and the team to capture the massive opportunity ahead of us. And that's the news. Now we'll get to the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis though, it's also crude, gold, and silver. We're currently in week 353. And over the past 353 weeks, we've issued over 19,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Now, Sunday night, I will probably publish alert number 19,600. That means 400 more alerts before we hit that big round number at 20,000. Okay. Now, this morning when Valerie did the recap at 6:30 a.m. Eastern, since the markets opened Sunday night at 6 p.m. Eastern, that's when we go to work, Sunday night, not Monday morning, like the Wall Street stock traders. Us futures guys, we go to work Sunday night. So since the markets opened Sunday night, that's the beginning of the Monday session, we've issued a total of 67 alerts this week so far. I don't think I'll issue any more today. Now, at the time Valerie did the recap, we were still waiting on the outcome of 18. So she'll do the recap. She'll finalize the recap this afternoon for the week. It'll either be this afternoon, evening, or early tomorrow morning. And of course, she'll post it in all the appropriate places. But I'm pretty sure that some of these 18 waiting will get triggered or have been triggered throughout the trading day. So 67 alerts issued, still waiting on 18. That gave us 49 actionable alerts, of which 3 or 6% would have been stopped out, again based on market structure and a simple process we teach all of our passport holders. Every logic alert has an entry price, an initial target, which is designed to help you get your goal for the day, and in most cases additional targets and then a final trade to target. Yes, you can trade them. I can't stop you. But really, I hope you'll focus on using them as they're intended, and that's to teach you how to read a chart. If you want to become a trader, you gotta learn how to read a chart, okay? If you want to be an attorney, you gotta be able to read case law. If you want to become a doctor, you got to be able to read the medical journals. If you want to become a trader, you got to learn to read the chart. And that's a very different language. No words, no sentences, no paragraphs, no punctuation. But every chart tells a story. And you should be able to look at any chart of any market and create your own narrative for what that chart is telling you, and instinctively know what the next high probability move is. Now, what we've learned over 353 weeks and almost 19,600 alerts is that 20% of the time or less, the market is going to do something other than the next high probability thing. So have I wasted any time or treasure trying to best that 20% or less stop out rate? Absolutely not. I mean, that's the pot of gold at the end of the rainbow. If you're chasing that holy grail where you never get stopped out, man, save your time, save your treasure. You only have so many years on planet Earth, and your treasure, I mean, just give that to some worthy charity, I guess. But don't throw it away on something that not only does not exist, but cannot exist. No AI is ever going to be able to predict what the market will do next. I mean, you can guess, and you'll probably be right 50% of the time, but 50% of the time is not good enough to make you a profitable trader. Unless you want to get into a whole different type of trading, long-term trading, swing trading. Then you got to have the money, to cover the overnight margins because you're leaving positions open for days. So anyway, I'm just telling you, you've got a way here to learn how to read the chart if you'll just show up and do the work. It's up to you. I can't make you do it. The logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 353 weeks is a very long time, but way before, way before, there was a Logic 247, we had our original alert service, the concierge trade alerts. They're different. Number one, they're just targets, and number two, they don't come out around the clock. Last night, all these targets were posted 5 minutes before the market opened. Okay? So every member, every trial member had these targets: the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Every member, every trial member had these numbers 5 minutes before the market opened. So let's go take a look at the daily chart of the S&P 500 E-mini futures and see what's shaking. Notice that price is trapped right here. Okay, we've got the 62% reverse fib. In a downtrend, you draw your fibs from the high to the low. So we've been up against that 62 for 1, 2, 3, 4, 5 out of 6 trading days. This day we didn't touch it. Now, we know that when blue and climbing gets directly above price, it becomes potential resistance because it's probably on its way to becoming red and falling, as it did right here. Okay. So when I say price is trapped, because the black step line is directly below price, that's acting as support. Blue and climbing directly overhead, that's acting as resistance. And we find ourselves straddling that 62% reverse fib again. Now the downtrend looks like this. Lag, retracement, lag, retracement, leg, retracement, leg. And on this leg, we failed to put in a lower low. So is that the end of the trend? Well, it's a little early to call it yet. But you can also look at it this way. If you feel the downtrend is over, leg, retracement, leg. We need that retracement back to the BBC. The green line is called the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. And then once we get back above the BBC, we expect higher prices. But here's the thing, price always reverts to the mean. In our case, the mean is green, and it's called the BBC. So I really anticipate a retracement back to the daily BBC, and then we could take off. And as we do, make sure you watch this area here, potential resistance, potential resistance. See this little double top right here, potential resistance. And then the bearish cross where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So let's call it 6,100 just to be conservative. Okay. Now, it's going to take a while for that to happen, but don't forget it because it's there. Does it happen 100% of the time? No. Very few things in the world of trading happen 100% of the time. There are a few things, like important prices, important areas are almost always tested. That's a 100%er. There's a couple more. If you've been around, you've heard them. Now, the daily chart's important because institutional traders, the guys with the deep pockets that actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So whether you trade futures, stocks, crypto, Forex, or ETFs, I encourage you to spend 2 minutes with the daily chart before you drop to a smaller time frame and start trading. Number one, it gives you a free look over the shoulder of the deep pockets. Okay. You can see what they're doing, not doing. You might find it's easier to go with the flow than to go against the flow. And you're able to identify major areas of resistance that you won't be able to see on your smaller time frame. Like yesterday's high. This high. This high. All potential resistance. Okay. And the same with support. We got the daily BBC, we got the 50% reverse fib, and then right here we have a bullish cross. That's when the blue line gets above the green line. Now, when we have a bullish cross that leads to an extended move, we expect a retracement. Number one, back to the BBC. But if the BBC fails to hold, then this area right here is potential support. So again, you're doing two things. You're seeing what the deep pockets are up to, and you're getting the top-down look, okay? So you don't get surprised by something. You know, on a smaller time frame, you could have an incredible setup on your range chart, but you don't realize that right overhead is a 62% fib retracement, or the daily BBC, or the daily blue and climbing. The larger the time frame, the more important the information it provides you with. To become a consistently profitable trader, you got to learn to work in multiple time frames. Okay? So, all alerts, both the concierge and the logic alerts. These are the CTAs I just showed you. Everyone had these numbers last night, 5 minutes before the open. The vertical line separates today, Friday, back here's Thursday, back here's Wednesday. When price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. Support, 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 support. Now we've dropped. Now, this was the opening candle last night. We opened below the BBC with red and falling overhead. So instinctively, we're going to anticipate lower prices, which we got. This candle here opened at 56.79. It dropped from 79. Come on. I can do this. From 79. It dropped to 67. So that's 12 points in this one candle. But an interesting thing happened. Now, only one of three things happens when price encounters a weekly trading zone. 70% of the times consolidation, 20% of the time rejection, 10% of the time the slice. And when you get the slice like this, where it's on a 30-minute chart, price slices through a zone like it's not even there. When it runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice, just as it did here. Okay. So, we didn't quite hit the short target on that move. Buyers came in early, just above the lows of yesterday, or the lows of yesterday. Yeah, mid-morning. Up we go to the BBC, and as I said, the pullback holds more often than not. So it was pretty quiet overnight. And then we got this candle, which is pretty wild. It ran all the way up to 57.15, and it ran all the way down to 56.76. Not sure what was happening then during the 7 o'clock hour, but that's what you got, and that's why you always got to use a hard physical stop. Otherwise, you're going out of business. So, in a chart I posted in the discussion group this morning, I mentioned that perhaps we get a pop off the open. That would be this. I said, but I'm concerned that these 3 wicks here, price has been soundly rejected. And so this is the 9:30 opening candle. Pretty small for a 9:30 opening candle. I said, in the second hour, I think we're going to see the markets head lower. And we did hit the short target, support. Support will always send the market back to resistance. The pullback holds more often than not, especially when red and falling's in the picture. And now we're on our way back down to the short target. Probably again. 64 to 61. That's 3 points. You only need 2 points to get your goal for the day. On the Dow, here's where we opened last night. Below the BBC with red and falling overhead, so we expect lower prices. And we hit the target to the tick right there. See, when this candle closed and this one opened, it was red down to the target. Yeah, look where the target came from, market structure. And that support bounced us up to resistance. At the BBC, the pullback holds more often than not. And when the black step line crosses red and falling, that's an indication price is going to attempt to pull back to the BBC. So we had that same just quiet consolidation at the BBC overnight, and then this morning, 7 o'clock, we got this same kind of weird candle on the Dow as well as the ES. But the market failed to take out that high right there. Now when you see wicks like that sticking to the upside on your 30-minute chart, you should be looking for your best opportunity to get short, because price is most likely heading lower. That's what the chart's telling you. That's the narrative. Okay, so we got a bearish cross right here. The red line got below the green line. Now we've traveled, we hit the short target here, and we hit it here, 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 and now we've traded through it to the weekly trading zone. Now these zones are published Monday morning at 6:15 a.m. Eastern for over 15 years. So all of our members and all of our trial members had these weekly trading zones Monday morning, 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. So we're just sitting on top of support right now. Will that support send us back up to the BBC? Since we already have the bearish cross where the red line gets below the green line, I kind of got a feeling that you see this area right here, okay, bullish cross. I wouldn't be surprised to see price hit 41,175, we'll call it. Is that about 80 points? Depends on where you get in, of course. Okay. Let's say you got in at 41,200. 41,200 down to 41,186. We got 40 points, roughly. Yeah, something like that. Yeah, but we very well might keep going, okay? Once we might get a bounce here. A bounce back up to the zone, which we would expect to act as resistance, which would then send price back down to this area of support at 410.40. And if we get through that, then the zone, and then this low. Okay? You see how by looking left, you can chart out what action you're going to take at any given point in time. Okay? You find your windows of opportunity, and then you just kick back and wait for price to come to you. Beats chasing trades. Okay. Here's the open last night on the Russell at the BBC, but with red and falling overhead. So it pretty quickly took us down to the short target support, which was based off of what? This bullish cross, where the blue line got above the green line. Okay? I would call that good support. Would send us up to resistance at the BBC. And then there's that wild 7 o'clock candle this morning, where we actually ran up and hit the long target, resistance, which sent us back to the BBC support, which sent us back to the long target, resistance. Okay? Now, this resistance, it's, you see where blue turned to red? Okay? I was being a little conservative. And there's the results. And everybody had these targets 5 minutes before the market opened last night. Now we're about to get a bearish cross here. So guys, the indices could really take a tumble. Okay? Now, I'm not forecasting that. I'm suggesting it as an observation, because the bellwether really needs to break below this step line, touch the BBC, so we can get another leg up. Leg, retracement, leg, retracement, leg. Right? Okay. On the NQ, here's where we open below the BBC with red and falling overhead. And where did it take us? to the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Support sent us back to the BBC, where we consolidated for hours, and then there's that 7 o'clock oddball candle, okay, which reached up and hit the long target to the tick. You see right there where blue turned to red? That's that high right there. We continued consolidating, and then we put in a high here at 275, so we didn't quite make it all the way up to the target on this second attempt. But blue and climbing turned to red and falling, and we went back to the zone. See, we have to close below the zone. Now, we poked below it, right? But let's say right here, 2000, let's make it, let's really, 2042 to 2012. That would be 30 points at $20 a point, $600 per contract traded. 2042 down to the target. Is that 2042? Yeah, that's supposed to be 2042. Looks like I hit 2045. So that little area right there, okay, from 42 to 12, that's 30 points, $20 a point, $600 per contract traded. Okay. Now, what if price suddenly reversed and started heading in the other direction? Be prepared. I'd embrace all possibilities. Here we're talking 229, call it 230, up to 260. That's another 30-point window. At $20 a point, $600 per contract traded. Hang on, I gotta send a message here to Michael. Okay. All right, so we did the NQ. Let's do crude because Michael's gonna be here any minute. This was the open. Okay, we dropped to the BBC support. Support set us looking for resistance. We hit the target, we hit the zone, we traded through the zone. Now, you're probably wondering, is that the highest weekly zone for crude? Yeah. Yeah, there's still one more above. So we get a leg. Now, if you look left, you'll see why. That resistance set us back down to support. And now we're above the zone. We've overcome red and falling. So now right there where red turned to blue, that's potential resistance. And then of course up here, but just being conservative. What do we got? $61. I think we can make it 60-20. That's $200 per contract traded in that window. Okay, gold. Yesterday on the broadcast, live in real time, we drew in this window. Now, we did it yesterday, Thursday, Wednesday, Tuesday, Monday. We had to go all the way back to Monday to find the spot. And look at that. It filled. We found support at the zone, which bounced us up to the BBC, which we expect to be resistance. Pull back holds more often than not. And we filled the window again. And in doing so, hit the short target. Now, support came in. here. Okay. I would have expected right about there. That's okay. See that little spot right there? Okay. All right. So we hit the short target and we just hit the long target. Support will always send the market looking for resistance. And that resistance was based off this bearish cross right here. And when price hit it, it was like a brick wall. It's real important you learn this, okay? All right, last is silver. I drew this window in yesterday on this broadcast, live in real time. And we filled it. And then overnight, we filled it again. Now remember, you only need 2 pennies in silver to get your goal for the day. So this was 32.51 down to about 32.47. $200 per contract traded. Yeah. So where did we find support? Look at that. Right at the zone, which was published Monday morning at 6:15 a.m. Eastern. Right where we found support yesterday. Friday, Thursday, Wednesday. Okay. So the zone held a support. So now we got to go find resistance. And we found it at the zone, which sent us looking for support, which we found at the BBC, which then sent us looking for resistance. And it took an hour, and then on the third 30-minute candle, we popped. And this high right here, come on, baby. It just barely overtook these highs right here. Okay, so by just a little bit. So we're always suspicious of just a little bit. Price comes back to the BBC and the zone. That's support times 2. So we get a leg, a retracement, leg, retracement, and a leg. Now this high is this right here. See that? That's how market structure works. And Michael is here.
I am here.
Again, we're still waiting on price to break below that daily stop line and get that move to the BBC. Maybe it happens Sunday night. Okay, we got resistance times 2 overhead, the 62 fib, and blue and climbing, which is directly above price. So, okay, if you're ready, sir.
I am ready. Thanks. Sorry.
Oh yeah, no worries.
Good. I'm not.
If you need to run over, I got nowhere to be.
No, I have another meeting coming up right after this one too. So I was trying to cram a whole bunch of things in all at once, and you know, the one with Sean didn't end up working out, and I waited, and it didn't end up working out. He couldn't get a run on his end. And so
Okay.
Anyway,
all right, charts
here we
are
go.
good.
All right, here we go. Good afternoon, everyone. Today is Friday, the 9th day of May, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com and click on the purple button right here. There is no credit card required for this trial. Just click on that purple button and it's going to bring you to this page. On this page, all that we ask for is your name, your email, and your phone number. All right, your name, your email, and your phone number. Down at the bottom, we need to get your TradingView ID. If you want to use our charts, we need to get your TradingView ID. It's your user ID, or I don't know what it's called, but I'll show you where it is. All right, but we need that from you. Hit the register button. When you do that, you'll be sent everything you need to get into the room in the morning and to get your indicators indicating on your charts. Okay. Now, that thing that I was talking about, on my charts, it's over here on the left. But on a lot of people's charts, it's right here. You click on something, it's going to be either just your initials in a circle, or it's going to be an icon like that I created, you know, our passport for CFRN, or it'll be something like right over here. Either way, you click on it, it's going to say what you're logged in as. That's what you need to send to us, all right?
And if you do it today, you'll get 2 extra days.
You will.
Saturday and Sunday won't count against you. You'll have time to get familiar with the indicators, and then your trial will run next week, Monday through Friday. So,
and if you start right now, you can have the rest of today too.
That's right.
But see, mine says log in to CFRN. Whatever you're logged in as is what we need. All right, spreadsheet. We didn't have a great day today, but we had a good enough day. Today happens to be 2 years to the day since my last red day in the room. So I'm knocking on wood, because today wasn't an easy day. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we're up 44 ticks on the NQ, 1 on the Russell, 13 on gold, and 12 on the yes. So we're up just 505 on the day. Now, when was the last time I had a 505 day? It's been a while. That's our lowest day in this year. No, our lowest day since February 11th. Our lowest day since February 11th. But that's okay. I did a lot of talking this morning, and the markets didn't really give up all that much. So we were at $505 per contract overall. It took 3 minutes in one trade to get to the goal for the day. So if I were quitting when I got the goal for the day, I would only work 3 minutes this morning, and it would have been $130 a contract. All right, so I worked the extra, whatever it is, 117 minutes. Yeah, the extra 117 minutes to get it up to $505 a contract in 15 more trades. On the month now, we're at $6,282 over 6 business days, averaging $1,047 per contract per 2-hour business day. On the year, we're at $126,100 over 78 business days, averaging $1,616 per contract per 2-hour business day. Now, if you follow the 24/20 blueprint and you were to quit trading when you get the goal for the day and add 1 contract per month, so far this year you'd be on your fifth contract, and you'd only have had to have worked 10.18 hours, and you would have made $36,072, right? If you did it just like me, so you'd be averaging $3,542 an hour. Pretty good money if you can get it. Now, again, we didn't have many trades today, only 16 trades, so I'm going to go through them, and I'm starting a little late anyway, but we'll go through them and we'll talk about the trades we took and look at some other stuff. We had a pretty good meeting last night. If you guys didn't get to the meeting, you might want to go watch the video. I was trying to show how I've been unwittingly getting you guys to see things just a little bit differently, I hope. All right, so on the gold, our first trade on the gold was right here. We picked up 2 ticks, and that was an aggressive short trade right there. Over here, we did another aggressive short trade, and we stopped out. That put us at -13. Then right here, we did a conservative long trade, and that put us at +2. And then we did a conservative short trade, and that put us at +12. And then we had one more where we had 1 tick somewhere in there. I don't know where it is, but we had one more where we made 1 tick. It might have been right in here where we made 1 tick. Okay. Last night in the partners meeting, we talked about the kind of bugle leg, the bugle chop, and how that sets up trend changes usually. Okay. There's 2 of them right here. Okay. We went from here up to here, and then the midpoint of this run right here should act as support. From here down to here, and the midpoint of that should act as resistance. It's actually just about doing another one right now. Almost, not quite. But that was one of the things that we talked about last night in the meeting. And that was gold today. Right now, the Russell, we had just 2 trades on the Russell. One right here for 26 and one right here for -25. Now, this one for -25, it stopped us out pretty much to the tick right here. It was a perfect entry right here. I actually even had a better entry than it should have been. But it was right there at the midpoint, and it did pull back. I entered on the pullback just a little bit. I was like 5 ticks better, and it still stopped me out just to the tick, and then went down and did what it should have done. Really, this is the whole day on the Russell right here. The whole day on the Russell 19 range. Now, if it's going to continue to be like this on the Russell, where we're not going to have a bunch of trades, then I might drop the Russell back down to a 9 range. Okay. Or maybe even, yeah, probably a 9 range. And that was the Russell. The ES, we had just a few trades on the ES today as well. And there's a couple, there's another one, and here we go. All right, so our first trade on the S, I don't know where it is, but we picked up 2 ticks. I don't know if this was it. This might have been it right here. We picked up 2 ticks on that. Yeah, that must have been it. We picked up 2 ticks on that. Then we stopped out. That put us at -8. Then we went to +8. And then we went to somewhere a little bit later. We went to +12. Toward the end of the session, we had one more +4. I think it might have been right in here because this was 100% retracement down here. It might have been a +4 right here. Well, I know it was a +4, but it might have been right here. I didn't mark it apparently, but during the break, it got pretty choppy here during the break. A lot of sideways action. A couple of big moves. Pretty good stuff overall. Not a lot of trading though. We ended up with just +12 on the ES today. Okay, now at one point today, we were actually negative. It seemed like we were negative for about a half an hour today. And that was before I realized that it was exactly 2 years since my last negative day. Not my last negative day, my last red day. My last negative day, I think, was in February. But my last red day was exactly 2 years ago. All right, so on the NQ, our very first trade here, we picked up 40 ticks on the first trade. Sorry, 40 ticks on the first trade. And then we stopped out on this one. That put us at -20. All right, we stopped out -66. That put us at -20. We had a break even there. That was an aggressive break even. We had a conservative right here that we picked up 20 ticks. That got us to 0. And then we had an aggressive long trade right there. And that gave us 44 ticks. And that's what we ended with, 44 ticks right there. Let's see, during the break, really, this is the NQ during the break. Not much happened there on the NQ. Is Sean in here? Either of the Seans? Neither of the Seans are in here. Okay. All right. Well, that was it, guys. That was our whole morning. Now, I don't know what kind of trading we're going to have here right now. I really thought we were going to get a lot of action when the European markets closed. And I guess, if we look at it right here, when the European markets closed, there was quite a bit of move up. There was a big move up and a big move down, and I was just flattened out. The one thing I didn't do was come out here and see what this is. I looked at Dwayne talking about it, and yeah, we're still jammed up in between these two, and we're probably going to be jammed up in between those two. If we happen to get down toward the end of the day today, if we happen to get down below the black step line here, it would set us up for something big next week. All right, a big down day, actually going down to the BBC. He and I both agree that that's probably what's going to happen here as we continue sideways. I had drawn this in here because this is basically the pattern that's developed, right? This is an inverted head and shoulder pattern. This is the head, this is the shoulder, this is the shoulder. This is the shoulder, this is the head, this is the other shoulder. Okay, you can see that here. So the length of this shoulder from here to here, it extends out roughly this far on this side. Okay, I think I had drawn that at some point. If we were to take that length right there, that's what I think this is right here, and extend it on the other side. It's not, I didn't do it, that last one I did from the center, but this one, if I did it from where the shoulder actually began, it's right about here. Okay, where the shoulder and neckline are. So it comes out to about the same place. So that's what I was anticipating. I was anticipating that we'd get up through this. I drew this 2 weeks ago. I was anticipating that once we recovered from this and we got up above the BBC, that we'd get up to this level right here, which we've done now. And now we're anticipating some chop here for the next week or so, and then eventually a big run up is what I'm thinking. All right. There's so much going on out in the world that I don't think we're going to have a dry summer like we often do. I think we're going to have plenty of opportunity all summer long. I know it's just May, but I'm feeling kind of summery. So, all right. Let's see what we have here on the gold. Well, we've done more than 100% retracement on the gold. Okay, right there. It's more than 100% retracement. So it could just be looking for a pullback up to here, but it's not going to come together really nicely. All right, you want to have a couple of up closes here. You want to have an up close on this one and an up close on the next one. That's going to be into the overbought and be pretty close to the 50% marker there. Okay, so that wouldn't be too bad of a trade. Now over here on this one, we came all the way down into the oversold, but we never made it on that one. We never made it into the overbought. Now that is unusual. Usually it's going to nail that overbought right there. So this, if it comes out of the oversold right here, yeah, this kind of disqualifies it. I was gonna say, if it comes out of the oversold right here at the midpoint, it'd probably be an okay trade to take, but I don't really want to do it because this one didn't make it into the overbought. It showed a weakness right there. Okay, this is the third time today that has worked out though. Not so much on the IS, but on the NQ, it did twice in a row this morning. Just get rid of that and we'll get ready for the next one. Okay, over here now. This is what you were looking at, that to that. So that would have been a perfect spot for an entry on an up close right in there. Okay. I could draw it the other way. I should draw it the other way. Here, you go like, oops, yeah, didn't mean that. This is what I meant. Draw it from there to there. Okay, perfect spot for an entry on an up close. It's right there. I was eyeballing it. I was just drawing it the wrong way. The question box. Questions. Here they are. There are no questions. All right, no questions. That is a nice round number of questions. So we wait. This has now reached the swing high. Okay, we've gotten into the overbought. We've reached the swing high. So the ideal spot for a trade would be right here. Okay, this could work out pretty well, pretty close to being exactly what you want. I don't know that it will, but it could. Well, we're at a place here where we could have a decent trade. We didn't put in a higher swing here on the NQ. That's what it looks like. Okay. That's what it looks like. And this right here is actually on the gold. The gold. The gold's actually a momentum. I'm not a momentum. It would be a conservative short trade here if you get it down close on this right now on the gold. That'd be a pretty good spot for a conservative short trade. Okay. If you get it down close on that over there. Okay, it's got a high rate here of 44, so you'd be selling 43. Here it is. Okay, the window always on top. And we'll be looking for a retracement here and a retracement here. And now over here as well. Didn't quite fill there. There we go. Now we're filled. At the down close, we filled exactly what we wanted to fill. And now, after it gets 5 ticks in profit, it's going to hit right here. The yellow has to hit right there. Rachel, have you talked to Ray recently? I haven't talked to him in the longest time. I see you're out there. Just curious. All right. This is a good spot for an aggressive long trade on the ES. Okay. Aggressive long trade on the ES. There that is. There that is. This is going to break even. I'm going to lock in a point, and I'm out with a point on the ES, and it's not looking real good over there on the gold right now. But now the reason this was a good spot for an aggressive long trade on the ES was because the entry was right here at the 50% marker, and we just stopped that on the gold. Okay, we just stopped out on the gold. This, if we got a down close here on the NQ, would be a good spot for an aggressive entry on the NQ too. Okay, so get ready for that. No. All that means is we need a down close. I'm just going to click right here in the green. Okay. If we get a down close on the NQ, that's what I'm going to do. Just click in the green. Oh, did you talk to him recently? Is he okay? I haven't talked to him in the longest time. All right, now it's not exactly the same year now. It's pretty close. It's going to be pretty close to the same trade if you get a down close on this one, but if this bar closes up, then it just throws things off. Okay, well, that's good. I'm glad he's doing okay. Whoa, I just capped all the way down there. Okay, well, forget that. I'm glad I didn't have an order waiting there. It gapped all the way down there. Wow. I'm glad I did not have an order waiting there. Well, now it's actually got a trade on the other side. If it had given a down close, it would have had to trade on the other side. Now it was flipped back. I'm just going to let this thing work itself out. I don't know what just happened right here. It's 122. What just happened at 122 in the afternoon on a Friday? Wow. Okay. Well, now we'll just get ready for some more trades. It's 123. We still have 7 minutes left. We have time for a couple of more trades here. This isn't going to turn into a trade you're going to want to take. That is going to be aggressive here or here. Neither one of those will be aggressive trades you want to take. Or even on gold, you can look for conservative trades on all of these right here. Okay. Well, the Russell might be able to do something. Okay, the Russell, you're looking at that. So you might be able to do an aggressive trade on the Russell, but the other ones you're going to have to do conservative trades. The conservative trade coming out there, conservative trade coming out there on both the ES and the NQ. Right, and I'm going to break even on the NQ right now, and I was going to go to break even on the ES, but I can't now. Right, we are break even on the NQ, and the ES, it went enough for me to go break even, but I didn't do it, so I'm going to do it right now. Okay, and I'm just going to lock in one tick. I ended up with a break even over here on this NQ trade, but the ES, I'm going to lock in 4, 8, and I'm out with 8 there on the ES. Okay, and now those were conservative trades where it came out of the oversold right here. Great spot to enter right there at 50% retracement level on both of those. Okay. I didn't. This isn't actually a valid trade, so the Russell isn't working out to be anything yet. It could give you a down close right here. And if it gave you a down close right here, that would be good for an aggressive long trade. The Russell would be. Okay. Yeah, the gaps. I don't know what the heck's going on with that. Is it gapping on other platforms too, like on the NQ and stuff like that? Is it gapping on DT Pro? Do you see the same gaps? I don't even have DT Pro installed on this machine. But you know what that is? It's an influx of orders in a thinly traded market. So to go from
On the 30-minute, I've noticed no gaps, but I haven't looked at the smaller time frames. So
okay, yeah, on the 30-minute you probably wouldn't see a gap in there, and you'd have to look at the range bars too. No gap on Ninja, Bob says. Okay. Well, you know, the way that they create the range bars with TradingView is not the way that they are created in other places. They create it from a 1 minute bar. So I don't know exactly how they do that, but sometimes you get a gap here that you wouldn't normally have somewhere else. And you know, if I switch this, if I go to like a 31 range and back to a 47 range, you know, we still have the same gap in there. Okay, so it's 1:26. We have a few minutes left in here. We might get another trade off. I was looking for this one to give us something here, but it didn't. Over here, we got into the oversold and came out of the oversold. We don't really have anything going on there. When you use the 7 range, it's about the same. Okay. You mean the gaps and stuff, Bob? Or the no gaps? Because there's Ninja. I don't know if you remember, we used to have this thing with Ninja that we had a no gap range bar that would take the gaps out in between the range bars. So when a bar closed at one level, it opened at the same level on the next bar. It didn't have a gap in between them. Do you remember that? You're probably using it.
have you talked to that guy about creating one like that for TradingView?
It's part of the install, I think. No gap range bar.
Have you talked to that guy about possibly creating one for TradingView?
Yes, he does not do PineScript.
He doesn't do PineScript. Okay.
Actually, no, wait a minute. He does do PineScript. What did he tell me? No, maybe he doesn't do PineScript. Yeah, he does Ninja Trader in easy language. Doesn't do PineScript. That's what he told me. Okay. Yeah.
All right,
I'm pretty sure that's what he told me. I did ask him about that though, and in the other thing that we have for TradingView, the break-even box, you know, that thing, the buttons and all that. I asked him about that too, and he can't do that.
By the way, I have a friend who shall go unnamed behind the scenes, but pretty high up in the hierarchy. For those of you that use the DOM from StoneX, he is lobbying for a break-even button for that DOM.
Good. That's what he was asking me about. 2 days ago, he asked me.
Yeah. He asked me too.
Yeah, so I showed him 3 different ways to have a break-even button on Sierra. 3 different ways that Sierra has a break-even button.
I sent him the same thing.
Good. All right. Well, we didn't really put in a higher swing here, so we're not showing strength. We're in the oversold. We could come out of the oversold. It's going to give us this much room from here to here to the swing high. We have less than a minute left, so I'm probably not going to take that trade on the NQ. We didn't show strength here either. We didn't get into the overbought either, I suppose, but we did get into the overbought here without hitting a new high. We got into the overbought here without hitting a new high. We didn't get into the overbought here. Yes.
Something about today's trading kind of felt like holiday trade to me or something. I don't know.
It does. It does feel that way. It feels like everybody's kind of worn out, and you know, it's like they're all stressed out about the FOMC thing, which turned out to be nothing. And you know, I had said at the beginning of the week on Monday, I think, beginning of the week. Oops, that's the wrong one. Click on this. At the beginning of the week on Monday, I had said by the end of the week, I bet we're going to end up right where we are right now, right here. And look where we are right now. Exactly the same place.
Guys, I think Sunday night, if we close with a red candle today, Sunday night just might be the night when we get that drop to the daily BBC. That's the green line there on Michael's chart.
Right here. Right there.
Yep. And I expect that to be good support, because I think the market's trying to transition from this downtrend back into an uptrend. So,
and so typically what happens is when you get across above the BBC, of the MA1 across the BBC, that means price has to go first, pull it up above, and then it'll come back and test the BBC, and it'll hold on the first punch.
Yep. Yep.
All right. It is time, guys. I have another meeting coming up here very shortly, so I'm going to say this about that. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required.
Purple button I was telling you guys about that you can't miss.
This one.
That one.
You can't miss that purple
You
button
cannot
right
miss
there.
it.
Click on that.
It's purple.
And I could probably make it. They have a limited number of colors that I could make that. Purple was one of them.
That's great. Yeah.
And it's going to get to this registration page. Just fill it out. All right. You do that. It'll be sent everything you need to get in the room and get your indicators indicating. If you do it now, get your indicators indicating today. I have trades that just triggered, I think. Well, never mind. I'm not going to get into it. There's an old trade right there. It's in the money. Let's say this last part. Today, it took 3 minutes and one trade to get to $1,300, and we're up $505 a contract. Okay, I think that's it. I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Now, I know you just said it, but let me ask again.
Yes.
Recap of the morning session.
Today, it took 3 minutes and one trade to get to $1,300 with 10 contracts.
Good job.
Thank you. Thank you very
now,
much.
if you're trading one contract, that's $130.
That is
you're
right.
Like, well, gee, I can't live off $130 a day. But you just keep showing up and do what you've been taught to do, and pretty soon you'll have enough money in your account to add a second contract. And then keep doing the same thing, and someday, if you keep at it, you could be at 10 contracts too. That's our plan for you, based on the 2420 blueprint's designed to take you up to 20 contracts. But at 20 contracts, the markets are less liquid today than they were back in 2005, 2006, when Michael and I met. The ES used to do, on average, 3 million contracts a day. Now it's down to between 1.5 and like 2 million a day.
Yeah,
and
it's crazy.
I don't really know the reason behind that. Well, a lot of it has gone to the micros.
Well, not only the micros, it's also going to crypto. We didn't have crypto back then.
That's right. That's true. So, okay, so you're done. I guess we'll see you when we see you. Have a nice weekend.
Okay.
And I reminded everybody already, it's Mother's Day. So take care of Mom. Don't forget of that aunt who was like a mom to you, and your grandmother if she's still around. And it's an important day for the ladies in our life, so try to make it special in some kind of way.
Yes, indeed.
All right, guys, I'll show you one last look at the daily chart, and my little yellow arrow is still there. Maybe Sunday night. Now remember, we got support at the step line, support at the low of this candle, support at the low of this candle, and then it's a quick drop to the BBC. So will it happen? I don't know. I don't see it happening today, but it could happen Sunday night. Because on Sunday, hopefully you guys don't spend, hopefully you go to church on Sunday and you don't spend watching these news programs like Futures with Maria, because there's always so much negative political talk, and that can weigh heavy on the markets when they open Sunday night, because they rarely say anything good or positive. So that could add to my reasoning for the potential drop down to the BVC. So we'll see. To become a member, go to mytradingiq.com, watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Tell us you want to become a member, a passport holder. We'll send you an email that explains what it means to become a passport holder and include a link you can click to seal the deal. You're going to get 2 hours of live training every trading day in an interactive environment. In other words, you're not just sitting there watching somebody trade. You're getting full commentary of what's happening real time in live markets. We're setting up for a trading goal. We're setting up for a trade on the ES. And you are watching, listening, learning by asking every question that pops into your head while you trade your demo account to qualify to go live. Along with those 2 hours of live interactive training every trading day, as a passport holder, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. That's why it's so important you learn how to read the chart, okay? So that you know where to expect resistance, where to expect support. And based on the last 353 weeks and almost 19,600 individual Logic 247 alerts, we know that about 20% of the time or less, the market's going to do something other than the next high probability thing. As of Valerie's recap this morning, we were at 6% for the week. For those of you that weren't tuned in earlier when we looked at that, I'll show it to you again real quick. Now this will change this afternoon or evening because Valerie will finalize the recap for the week. But since the market's open Sunday night at 6 p.m. Eastern, we've issued a total of 67 alerts. At the time of the recap, we were waiting on the outcome of 18. Some of those have been taken care of. That'll be in the update tonight. 49 actionable alerts, of which 3 or 6% would have been stopped out, again, based on simple market structure and the process we teach all of our passport holders. So, very good week. Very happy with that. And remember, Sunday night I will publish alert number 19,600. That means there's 400 alerts left before we hit that big round number at 20,000. So please use the logic alerts to learn how to read the chart. Okay? All right. Now, reading the chart is important. The logic alerts will help you do that. Because as a passport holder, you're going to get the logic alerts around the clock. You get the concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. This week, we actually, I don't think I pointed that out. Let me point it out real quick. Gold back early in the week traded above the highest weekly trading zone. But I said when we, now this is Friday, Thursday, Wednesday, Tuesday. I said Tuesday. I said by close of business on Friday, based on the last 15 plus years of weekly trading zones, we expect price to be at or below the highest weekly trading zone. And look where we are. We were up here. We're back below the highest zone. So that's kind of cool. And I just thought I'd share that with you. Okay, good word for the day. And this will wrap it up for the week. How God sees you. Romans 8:1. There is therefore now no condemnation to them which are in Christ Jesus. Once we understand that God's love for us is based on what Christ did for us, rather than what we do for ourselves, the struggle's over. Now we can stop performing, and we can serve God because we know He loves us, and that we don't need to try to make Him love us. We no longer fear rejection by Him because of our mistakes. When we do something wrong, we repent, receive God's forgiveness, and then refuse the condemnation that the enemy is going to bring because of your mistake. Realizing that we are loved and accepted, even though we're imperfect, is an incredible relief. Serving God out of desire rather than obligation is incredibly liberating. Now, as a kid, I loved spending the weekend with Granny and Granddaddy Reeves. And if you were in my grandmother's house on Sunday morning, you would either be in the emergency room, in the morgue, or in church. There was no other options. So, as a child, I went to church out of obligation. But now, I go out of desire. I look forward to it. I enjoy it. I'm actually a part of it. And as I said, that's incredibly liberating. It shifts the whole dynamic of life and the life that is yet to come. The moment you place your trust in Christ, God sees you as righteous from that point on. He doesn't accept you because of your performance, but because of your relationship with Him through Christ. And you need to decide to believe it and stand on it. A noted minister writes, "We become what we believe we are. Therefore, as we become convinced that we are right with God, our behavior will improve. We will do things right and with less effort. No matter what other people may have told you that you are not, God delights in telling you in His Word who you are in Him. Loved, valuable, precious, talented, gifted, capable, powerful, wise, and redeemed." Take a moment and repeat those 9 things aloud. Say it. I am loved, valuable, precious, talented, gifted, capable, powerful, wise, and redeemed. Because that's how the Creator of the universe sees you through Christ. Think about it. The Creator of the universe, that's how He sees you. And it's high time you start seeing yourself the way God does. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.